Hello, Kevin Barry here. Welcome to this 15-minute summary of what every seafarer should know. Look at this a couple of times and feel free to email us if you have any questions. You can see our contact details there. Okay, this is the plan. I'm just going to point you to our websites. We'll run through the 8 items. Going to show you a few examples, and if you want to email us any questions, I will email you back the answers. Don't think you'll be emailing us answers. Okay, that's our websites there. So if you click on those, you'll find out who we are, what we do, where we operate. We also have a blog, growthaccountants.com, which is where we publish articles. On linkedin.com, there is a profile of me and the people who work here, and Google us if you like. Okay. Right, seafarer, just to be clear on this, somebody who works on a ship. In other words, it could be the cook, it can be the captain, it can be the engineer, but effectively they're on there. That ship goes to a foreign port or platform. Now, this is Irish tax law. A platform, like an oil rig, is a foreign port with us. With the UK, it's not. Okay, you must actually dock at a foreign port in a foreign country. Okay, so just be aware of that one. But this is from the view of an Irish taxpayer. Okay, that ship must be carrying passengers or cargo. There isn't much else it would be carrying. However, if it's a yacht, you can't just go sailing around the place and pretend you're a seafarer, okay? But if you're the captain, it is different. You are carrying passengers then. And a seafarer is someone who's 161 days out at sea. It does not include fishermen. Okay? They might be that, but they're not going to a foreign port or platform. They're just out fishing. Okay, so that's your key difference. Okay, another key difference to be aware of. There are 2 types of seafarers: people who are Irish tax resident and people who are non-resident here. Okay. In short, this is a summary between the 2 of them, and I'll show you how you reinforce that difference in a few minutes. Okay, but a resident seafarer is somebody who pays tax here in Ireland. They'll pay less tax than other people, but they do pay tax here, and universal social charge, and sometimes PRSI. They're over 161 days at sea, and you're going to find this number all over the place here, and they have an Irish address. Okay, so their clothes and their gear is here when they're away working. A non-resident seafarer, if they set themselves up properly, pay no tax in Ireland. They are less than 140 days on average in Ireland. Okay, so that's 1 day every quarter. Sorry, 1 month every quarter. Okay, that's really the best way of putting it. Every 3 or 4 months they're home for 30 days on average, but 140 days or less on average in Ireland. And that 140 days must be between January 1st and December 31st. They do have a foreign address. They are paid into a foreign bank account, and they work outside of Ireland. Okay. Couple of important items to understand and to know. I'm going to hit them here now pretty immediately. The airside rule. Now this is if you work, say, on a Stena Sealing ferry or Irish ferries. The boat heads over to England or heads over to France or beyond, pulls into Dublin port or into Cork, but if it pulls in there and you're on it and you don't get off the boat or you don't leave the confines of the port, so there's a lot of securities systems on ports these days, but you stay within the port. Well, as far as Irish taxman is concerned, you're still out at sea. You're what's called airside, and the same applies if you land in an airport and you stay in the terminal. You haven't actually arrived at all. Okay, you're gone effectively. So these days count when you're adding up your days at sea or your days out of Ireland. Okay, so that's a very important rule. So like this person here, we can see you, but we can't do anything else with you. The second one, which is an important one to understand, and this is a huge difference between Ireland and the UK because it adds up, is in the UK, if you were gone before midnight, in other words, you've flown out or sailed out, then you were never there. We call it the Cinderella rule. But in the Republic of Ireland, if you set foot here even for half a day, like Michael Smurford coming for the Grand National, once you're in here at all, it counts. So whether you're gone before midnight in the Republic, you're still here. And effectively the day going and the day coming aren't counted as days out of Ireland. So what does that mean? It means you're losing at least 1, if not 2 days per trip. Okay, so you've got to keep a closer eye on your days. Alright, so the midnight rule is an English rule, and it doesn't apply here. Okay, that's number 3. What tax discount do you get in the Republic of Ireland? An extra 6,350 euros is given to you as tax-free income, and that sounds great for a minute. As long as you're paying tax at the 41% rate, that'll save you 2,600 per year. However, this universal social charge is an extra tax for the bailout that's taking money off people, and that will come to nearly that anyway. But you're still saving. That's well worth knowing. If you're self-employed, there may be other tax-deductible expenses you can claim, such as travel costs, doing various courses, a tax break each year for having equipment that you need to maintain your qualifications or business, motor expenses, maintaining an office, employing your spouse or somebody here, nephew or niece, to look after your post, and any expense you pay out in order to make money is taken away from your total income, and you only pay tax on the difference. Okay, so just be aware, if you're spending money in order to make money, that should reduce your tax bill, but only if you make someone like me aware of it. Okay, number 4. Number 5. Okay, the difference is a non-resident seafarer won't pay any tax. A resident seafarer will. Okay, and there's a huge amount of both around the place. That's the first thing. The second thing is, and there is confusion about this, the 183-day rule. That's 6 months. Okay, so in other words, you multiply 183 by 2, that's 366. So if you're out 183 days in the UK, they class you as non-resident. In the Republic, you've got to be out 225 days. Now there's numbers flying around here, but the 225 days is the opposite to the next line there, which is the simple way. The simplest way is, and I want there to be no confusion about this, if you're 140 days or less in Ireland each year, you don't live here tax-wise, and therefore you don't pay tax here. So where are you living then? Well, you might be living in a tax-free jurisdiction, or you may not be resident anywhere and pay no tax, but effectively you don't pay it here. Okay? All days count on the 140. Okay, so if you come in for a day here, or 20 days, or you land in the country, those days count. But as regards days away, all days count as well. So you might be working in Africa for 200 days, and the other 25 days you spent on holiday in Lanzarote. Those days count as being out of Ireland. Okay, so holidays count as well as work days. Okay. So if you're living here, and then you start to become non-resident, in other words you're out for your days, you don't pay tax on your job, so the day job is fine. But if you're selling and buying shares, or you've rental income outside of Ireland, like a Spanish apartment, unless that exceeds 3810, okay, you won't pay any tax here. So what we're saying here is 3 years after you start to become non-resident, you're still filing income tax returns here, and actually the likes of me advise to keep on going if you've any intention of coming back, just to show where your money came from. But effectively, once you're gone, the first 3,810 is tax free. But if you leave Ireland to work abroad last year, you aren't gone 3 years, and you're earning 5,000 a year in rental income from your Spanish flat, you are meant to put the Spanish flat income on your tax return and pay tax in Ireland. Sounds crazy, I don't know how many do it, but they should. Okay. So how do you prove all this? Well, it's a matter of keeping records, and the rule is you're meant to keep your records for 6 years, but my rule is don't throw anything away. The least you should do is keep copies or scanned copies of these items. in other words, number 3 there, keep a diary. Keep a diary each year of where you are and what you were doing and where you lived, who paid you, where you worked, especially if you're on a drill ship or an oil tanker, where you were going. Okay, but the discharge book shows you getting on and off a boat in foreign ports. The passport may be stamped as entering and leaving foreign jurisdictions. The diary is your written record of where you are. Receipts could be taxis or hotel receipts. And you don't have to keep lever arch files of all of these. You could scan these and keep them on a Dropbox account up on the internet, and it'll be there 20 years from now for us to access. If you have a foreign address where you have an apartment or the job puts you up, keep track of those. If you're paid into a foreign bank account, obviously that's evidence you're not here. If your employer is based in Monaco or the Isle of Man or Southeast Asia or America or Holland or Germany and so on, that's also evidence that you're non-resident. The foreign bank account, again, if your wife is living in Ireland and you're working abroad and you're watching your days, file separate tax returns to reinforce the fact that you have separate incomes. Okay. Second thing is that the wife could be your employee here, but money passing between husband and wife is tax free anyway. Every holiday you take is a business trip, so keep receipts of where you stayed and find a business reason for being there. My experience is that self-employed people never actually take holidays. Every trip they take abroad, one way or another, is a business trip, whether it's looking at yachts in the marina or thinking about moving to an area. And bad weather days. This is an interesting one that's come through the courts. If you find yourself going over your days in Ireland or not getting your days out at sea, if it's down to bad weather that caused this, on a once-off basis, this can be excused. So if you're, for instance, a non-resident, if he couldn't move to a certain zone due to the ash cloud, just couldn't fly out there, well, the days he was delayed in Ireland don't count as being in Ireland. You just need to obviously have evidence of it. So that's important to know, and that's where your diary really comes into it, keeping a few newspaper clippings. Always have a look at the Irish Times. There's always something in there about residency. Always having a go at people. I'll jump down to the last one, scrutiny from revenue. There's often queries just looking for evidence of people being abroad, and that's where we educate people to keep the proper records that we'll keep a scanned copy of, and we'll answer queries routinely if they come directly to us. Where are you tax resident? That's got implications for where you pay your taxes, if you have to at all. Universal social charge, it's probably here to stay for the moment. It's the bailout tax for bailing out all these banks. It's effectively doubles an awful lot of tax bills. If you pay UK national insurance, it's optional that you don't pay Irish. You don't pay the two anyway. You don't pay Irish PRSI and UK national insurance. So I believe it's compulsory now that if you're working in the UK sector for a UK company, you must pay UK national insurance. But if you do, you don't have to pay Irish PRSI, which is a lower figure. And if you're working for a UK company, just on a little aside, but you're over 183 days away from the coastline there, well, then you can claim back all your tax in the UK, but you may find yourself paying it all again here. It's just something we have to check on a case-by-case basis. Alright, I'm going to show you a couple of examples now. These are real examples of real people, by the way, but just to illustrate how different situations have different results. Okay, this lad was working for BP offshore, month on, month off, nothing new there, earning his trade. Okay, his days were, he was 183 days out of Ireland, but less than 225. He did qualify for the Seafarer allowance. Now that's the 6350, which is tax-free, so he received a discount on his tax bill of 2,600, but he still ended up paying 11,577 here. Now that includes everything: PRSI or national insurance, the social charge, and his income tax. But if he hadn't claimed the Seafarer's allowance, it would have been 2,600 higher. Alright, which is over 14,000. So that's a resident seafarer example. Here's I'll show you two non-residency examples. Now, the non-residency in the Republic of Ireland is a little trickier. There's all types of rules around there, but this illustrates one of them. This lady was working with Stena Sea Link. She was over her 225 days out of Ireland means that she was less than 140 days in Ireland. So all of a sudden it sounds like she's non-resident, but they have a little tripwire in that you have to be non-resident for this year and the year previous. Now she didn't qualify for 2011, but the way out is as long as she was less than 30 days here in 2013, she would pay no tax. So she was told by me, be gone by January 31st and do not come back for the rest of the calendar year. So she did, and she saved 14,177 in tax. Okay. So in other words, if you're here year in, year out, tax resident, that's fine. You leave, they still want tax off you, if they can get it anyway. But to reinforce the fact that you're gone for the following year, be less than 30 days. This may suit your example. Slight alteration, I kept the name the same. And this reinforces the fact that the 140-day rule is an average rule, okay? This person was most of the year being 270 days out in 2011, which left her 95 days here in that year, so that's great. But she was only she was more than 6 months in Ireland in 2012. So the shock hit her that she thought she was going to have to pay tax for 2012. But the 140-day rule is an average. It's an average of 140 days. So when you added the 270 plus the 180, this gave her 450 days out, which left her with an average of 140 days in per year. So she didn't have tax in 2012. Maybe have a look at that one and you'll get it. So it gives you the different scenarios. Just another one as well. Depends on who you're working for. If you're employed or self-employed, with this person, gave an invoice and she was getting paid it month on, month off. She was resident in Ireland, lives here, comes home, see the husband and kids all the time. But as a sole trader, her tax bill was 67,000, and earning big money but paying big tax. She formed a limited company, give them an invoice every month instead of the invoices from the limited company, and a limited company pays its taxes at 12.5%, whereas an individual pays it at, you might as well say 50% at times. But effectively her tax bill was cut by 43,000. Okay, so that's a really dramatic example, but that can be a very legitimate way of managing your wealth. Fees here, these all include VAT. The first year for setup and planning out is about it is 840, and then each year after that should average, as long as we set you up properly, at 615 per year. Things come up, we might have to do a bit extra, but effectively that's what we aim at. And lastly, if you do need to form a new company, it's €615, but there's, it's a whole new person being formed up, and there's €1,000 a year of fees for the company. So that's an expense, but the savings are there. There's forms we fill out all the time. What can you do? Just have a look at our website. There's some information there we're improving on all the time, but effectively what we aim to do is get to know you by having you fill out a few simple questionnaires, give you a residency recipe. So depending on what you want to do, we give you the recipe to make it happen. We'll educate you on what records to keep and how to keep us informed, and as your circumstances change, we'll advise you along the way. Okay? So if you have any questions, email us. If you go onto our website, you can email us there, or kevin@kevinbarry.ie. Thanks for listening. Chat to you soon.